This is the Friday, October 24th, 2014 version of the Market Plus segment. Joining us now is Virgil Robinson. Virgil, welcome back.
Thanks, Mike.
We didn't have a chance to discuss cotton during the show. Could you give us your thoughts on where that market might be headed?
Mike, I don't see or sense any significant price improvement in the next several months. Couple things. World carryovers are projected to be almost as large as this year's entire usage. So we almost have a year's worth of cotton usage in a carryover position. It can be very difficult, given that kind of a supply scenario, to create any kind of exuberance about that commodity. One thing I have found a little encouragement in is the fact that synthetic pricing has fallen now to a level similar to cotton, and that too is a bit concerning, but I think given the preference one versus the other, cotton would be my choice in that instance, Mike, because the synthetic can rise and create a price spike more quickly, I think, than cotton. The other factor would be Chinese policy, which is really kind of limiting imports and encouraging domestic consumption and disappearance. So no significant price rise foreseen at the moment in cotton.
But there's nothing out there that that makes you too worried about a tremendous price decline going forward either, other than the tremendous overhang you mentioned earlier.
Well, oversupplies, the way you correct an oversupplied situation is drive the price to a level where it becomes attractive or more attractive, or discourage production, or some combination of the two. And I think that's the process the cotton market is currently involved in.
Now that seems to lead us right into our first question from one of our Facebook followers. Todd in Rice Lake, Wisconsin is curious, what is the crop to plant and cash in on in 2015?
Yeah.
Doesn't sound like cotton's the one.
Again, I don't know his personal financials by any means, Mike, but right now the ratio, and that's one of the more commonly discussed factors, corn-soybean ratio, is clearly tilting yet towards soybeans, Mike. So I think that signal is pretty much global, and it would appear to me we'll see something of a 1.5% to 3% decline in corn area harvested in 2015, and about an equal increase in soybeans for harvest globally in 2015. So please understand, we're not the only ones looking at that price signal. The globe is looking. And there'll be an attempt, even though right now there's some concern about production prospects in Brazil, there'll still be an attempt to sow a big soybean crop in that hemisphere or in that region of the world, Mike. So arguably, in the spring of 2015, we could have the largest supply of soybeans in the Western Hemisphere ever. And that clearly defines a risk moving forward.
You bet. With that risk in the future, should folks be selling November 15 beans today, or, I mean, at least at these prices before we begin to know with certainty whether South American beans are there?
At face value. Again, I don't know their risk tolerance
Right.
levels, their financials, or anything of that nature. But we did peak, I think, this week above $10 in that 2015 futures contract, Mike. So as you go through your crop budget as best you can do, and there are all kinds of tools to assist you, it would seem to me we are at or approaching an area where if you've not made any kind of a sale for 2015 and you intend to grow more soybeans, I think you have an opportunity.
Do you see the same opportunity existing in corn, or do you wait and see what we get planted in South America and what this spring looks like for the U.S.?
Well, as mentioned, we have some weather concerns in parts of South America, and we also have a ratio that's currently slanted more towards soybean production than corn. So corn will have to protect some acres moving forward, Mike, and I think you sense that now, with that futures contract this week trading to and above $4. So this $4 to $4.50 area, I think that's an attractive zone to begin some type of sales program for 2015.
All right. Now, we've had a couple of questions, and I've heard from a number of people curious about soybeans this last Thursday. We saw a 30-cent jump in the futures contract in November soybeans. What happened? Was there anything special on Thursday that caused it, or was it just simply momentum building in the futures market?
Well, there had to be something, a reason, Mike, and I'm not always privileged to know every reason why the market makes an abrupt turn and runs higher or lower. But we had option expirations facing us. We have news that there's some switching of soybean meal origin from U.S. to South American. I mean, there's a multitude of things. There's the Ebola scare. There are geopolitical concerns. So I don't know that there's one single reason as to why futures behaved the way they did on that specific day.
Okay. Now, we've got a question here from William in Hiawatha, Kansas. And his question is this a normal time for a market rally with record crops, and how much higher can we go? I think you've addressed the second part of that question, yeah. But from a seasonal perspective, historically, do we typically see an October rally in the ag markets?
Well, you're in a window of time where historically, you know, once you get 60 or 70% of the harvest behind you, that, in my opinion, would be more typical of putting together some type of seasonal low than given where we sit tonight. Mike, we just aren't at that point in the corn harvest for sure, and perhaps we're at that point now in the soybean harvest. But again, I'd feel more comfortable talking about a seasonal once we get that percentile of this crop harvested and moved and put away. Okay. We're not there yet.
Okay, but with some dry weather, could be soon.
Well, let's hope we make significant progress, you know, the up and coming week. And again, as mentioned, Sunday night, Monday morning, with all that's going on here through the weekend, hold on to your hat, or in my case, what little hair I have remaining, because there could be fireworks this weekend.
What is it that makes you worried about fireworks?
Well, I think several things. The European banks are going through stress tests this week. There are about 130 of them. The results should be known by Monday morning. We have a changing weather pattern, or a potential changing weather pattern, in Brazil. We have the geopolitical uncertainties that always persist, it seems. A presidential election in Brazil this weekend that could be instrumental in formulating both fiscal and monetary policy. So we have a lot of things taking shape this weekend that could create some pretty explosive price behaviors Sunday night, Monday morning.
So hold on tight. Now, as we talk about international trade and so forth, we've got a question here from Michael in Tyndall, South Dakota. He's curious about how high is this cattle market going to go? And of course, that's gazing into a crystal ball. But we did have cattle market news this week with the World Trade Organization declaring the cool rule to be invalid, or at least in violation of its rules and regulations. Do you anticipate that to have any significant impact on the markets going forward?
No, I don't, Mike. Short answer to a complicated question, I do not. To the other part of his question, can we go beyond $170? Certainly we can, Mike, but as mentioned, whenever you throw these kind of price signals across the globe, at some point there's going to be a reaction, and the reaction is normally an effort to increase production. If it isn't beef, maybe it's pork and poultry, and I think that is clearly underway.
And as you mentioned on the show, you get up to $170, or where the box beef values are, you can see demand step back as well.
It's possible, Mike. I haven't visibly seen a collapse in demand, but with the strong dollar, that certainly must come into play. The good news is that, as you guys mentioned earlier, petroleum prices, particularly gasoline prices, are declining, which would put perhaps a little more disposable income in your pocket. So I haven't seen beef demand collapse, but I certainly have seen promotions begin to switch away from beef and more towards poultry and pork. So understand there's clearly a price risk in that market as we visit about it tonight.
You bet. Protect yourself while you can.
Again, break-evens are not attainable in deferred cattle futures, so we're going to have some people commit part of their equity and part of their balance sheet to that part of the industry here moving forward.
All right. Well, Virgil, thank you for taking the time to join us this weekend.
Thank you. I enjoyed it.
And thanks to all of you for submitting your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.